I represent Ashmore EMM, what used to be called Emerging Markets Investors Corporation. We run a Pan-Africa fund. It's one of the first and probably one of the largest Pan-Africa, ex-South Africa funds. It was established in 1993. And I think our edge is finding very high-quality companies. Quite often they're obscure. Sometimes they're in exchanges that no one's ever heard of. And sometimes they're illiquid. But we find these companies and we build up significant stakes in them. These companies generally grow rapidly. They're in stable and growing markets. And they trade at between 30 and 40% discounts to their international peers. And sometimes they have international parents that provide the kind of due diligence, the transparency, the accounting, and the corporate governance that we require. So in a summary, we believe that the continent provides a tremendous opportunity as far as quality, growth, and value. The fastest growing region, high quality companies, and trading at significant discounts. I don't know if I could give some specific examples as well, or should we give the rest of the panel
No, a couple of specific examples.
Okay.
I'll go on.
So some specific examples. Take Ghana, for example. I think a lot of us know that Ghana was one of the fastest growing regions in the world last year. It's stable, it's got a well-established democracy. Unilever Ghana has been trading in Ghana for over 50 years. This company last year grew its revenue line by over 25%. Its volumes are going through the roof. They have a global suite of products and local products that they introduce into that market every year. This company is trading on a 12 PE. Its parent is trading on an 18 PE. This is for a company that has been operating for many years, has a return on invested capital higher than its international competitors, its parents, and its trades on the local stock exchange. Another example would be Lafarge Zambia. It was one of the only cement companies in Zambia in a country that's growing at 8%. This company, crazily enough, is trading on an 8 PE in an environment that's growing rapidly with massive infrastructure demands and needs. It's got a super high quality, and again, it's been operating in that market for a long time. And lastly, I just want to mention, we've been talking a lot about Egypt and what's happening in North Africa as well. One of the objectives of the new government in Egypt is to uplift the poor, to provide social security, housing, and generally to provide jobs and employment for a lot of the people that caused the uprising in the first place. There's a company called Epico, which is a pharmaceutical company in Egypt, which has one of the lowest cost producers of pharmaceutical generics globally. It has about a 30% market share. Last year, through the transition period, it grew its earnings by 15%. This company is trading at an 8 times multiple. It's growing rapidly. It's got a brand new facility that's world-class that will add over 30% to its capacity. And it pays a 9% dividend yield because 20% of its market cap is sitting in cash. These are the types of companies that we find across the continent. And I've only mentioned 3 of them, but I assure you that there are many of very similar examples of quality, growth, and value. And I think that in a portfolio that blends the size, the liquidity, the right types of clients, the right types of investment philosophy with a long-term event horizon, I think you can bring all these things into a portfolio that will generate superior returns in the future, just like they have in the past. Thanks very much.
Doing business in Africa, you can't afford to be without Africa Investor.